Hello and welcome to Big Deal. I'm Nisha Poddar. Now, the debate around promoter-led companies versus the professionally managed companies or PMCs by founders of startups is getting louder. Now, what are the responsibilities of a promoter along with the benefits they enjoy or the regulatory restrictions that they comply with? And how is a founder of a new age company positioned on these parameters? Let's find out from experts joining me on Big Deal today. Let me welcome on the show Sandeep, Parekh and Hetal, Dalal. Welcome to CNBC TV18, both of you. Hetal, starting with you, your proxy advisory firm IIAS has raised important questions on the raging debate on promoter versus founder classification. What's the premise of your report?
I think what we're seeing in several new age companies is that founders are being classified as founders, and founders as a designation doesn't have any regulatory definition. It isn't. You don't find any of the regulations, and it is not even a KMP position. So therefore, you have a set of founders who are essentially in control of the company, act and behave like promoters, but are not necessarily considered promoters, and therefore while they enjoy the benefits of that control, they don't have the responsibilities of those that are attached to typically a promoter. I think that's the fundamental premise. We've used Paytm as an example, but by and large, we see this in several new age companies as well. In Paytm, for example, at least the article that we talked about is focused on the fact that Vijay Shekhar Sharma is a non-retiring director, is the executive chairperson, has board nomination rights as long as he's either executive in capacity or holds 2.5% of the equity. He owns 51% of the payments bank, and Fin currently did a transaction which gave him a 10% incremental more voting rights. So all of this put together, right? And essentially, even when you look at how investors are reacting, they are essentially, when you look at the votes, they're voting to because they fundamentally believe he's running the business, he's central to the business, and he's the glue that keeps the entire company together, right? So you put all of this together, and this is, like I said, it's not isolated. You see this in other companies like Cartrade, you see this in Policy Bazaar, Zomato, where you have a set of founders who are extremely key to the future of the company, but are not classified as promoters, and that's the debate we're having. And is this the right way to look at it? While traditionally you looked at a set of companies where families have started or individuals have started, they've classified themselves as promoters, enjoy the same rights, but essentially have far many more responsibilities.
That's right. Accountability also comes with the promoter classification. Hetal, thanks for explaining that to us. Sandeep, what do you make of this particular debate, and on which side do you think you are, in your view, considering that the promoter classification and the role of a promoter in the eye of market regulator SEBI has gone through several changes and evolved a lot over the years? So, given the market regulator view and the way the promoter class is and the way founders enjoy some benefits but do not have those restrictions of promoters, how do you view this?
Nisha, so I'd like to kind of, while not disagreeing with Hetal, I think given the current regulatory regime, I completely agree with Hetal's perspective. But I just wanted to go 30,000 feet up and talk of the very concept, the mother question of who's a promoter. And I think only 2 countries in the entire world actually have this concept. Generally, what you have is, the company is a limited liability entity. The people who are responsible for the running are not the shareholders, which is what a promoter is. The people who are responsible are senior management and directors of a company. So, it's just from a large, big picture perspective, it's a departure from limited liability because you're holding shareholders, specific dominant shareholders liable for the running of the company. And if you look at, technically, if you look at it, it's really all accountability and not really too much of rights. There is some minor rights with respect to transfer under the takeover regulations. But again, that's most of that can actually transition. Almost all the promoter based concepts can be transitioned to a control person based inquiry, which is kind of much more of the global standard.
Yes.
And it's very interesting because SEBI itself had come out with a few years back. They said that, okay, this is a very unusual concept. It's kind of unique to India. We want to move away from this and get into the control person.
Yes.
So I think it would probably settle many of the kind of questions and the concerns which Hetal had.
Yes.
To move to a more factual inquiry. Then you call yourself founder, promoter, whatever else you want to call it. You are actually a control person. And that is always a factual question, number one. And number two, it's always kind of seen together with your other holdings. So, if you're holding through friends and family and other people who are actually factually dominating control of the company, you would be seen as a control person. So I think I would actually vote for SEBI's intention a few years back to move away from the concept of promoters and move to a much more accurate and factual inquiry of who's the control person. But
Yeah.
from the biggest picture perspective, I would say we should have very limited amounts of responsibility for shareholders. And again,
Yes.
whichever way you look at it, these are shareholders.
No, very well explained, Sandeep. But I would just mention, yes, I'm aware that globally, especially the investor community, does not want to see the tag promoter. They look down upon promoter. But one has to also realize that most of the large, well-respected conglomerates of India are promoter-run and family-owned businesses. So we cannot really shy away from that particular aspect. And therefore, this debate. Now, I want to ask you the disconnect and the mismatch in where the global view is, where the regulator is moving as per the global gold standards, and the requirements as well as the assurance that a lot of investors really watch out for in a company. In fact, our banking system also bet on the top guy or the founder or the promoter and take the personal guarantee for giving loans to the companies.
Yeah, is that for me?
Yes, Sandeep.
Okay. So yes, I think to the extent that somebody volunteers, their personal skin in the game, yes, definitely it's a good idea to, if it's a personal guarantee for a company's
Yes.
loans, it provides a lot of comfort to the banks, etc. So that again is not completely dependent on creating a founder tag. So really, a transition away from kind of a tag for life. It's really a tag for life kind of situation. If you don't control, the means of declassification of a promoter is kind of very onerous, and you have to go to shareholders, which is like so at times, it's quite unreal because we've had one example where a company where they can't the exiting promoters they ceded control to a private equity group and they were not able to kind of eject themselves from the promoter tag because they held more than 10%, even though they are one-third the shareholding of the actually the dominant private equity company which came in as a promoter. So we've kind of created a Hotel California situation for promoters at that time, especially
Yes.
people who are actually fighting with the dominant promoters, also called promoter group, and they find it impossible to detag themselves because the actual people running the company are they don't want the people they're fighting with to be detagged. So all
Yes.
kinds of absurd situations which arise when you come out with a non-factual kind of tag.
Right. So this promoter classification, as it evolves and as the outlook of the regulators and the country really evolves, it's a transitionary hurdle that we definitely face. But I would just put across, if you really go to a Tata, Birla or a Reliance AGM, you will see how the retail investors really align themselves with the promoter and really base all their, money based on that promoter entity also. So that culture is there in our market. Hetal, to take forward the point now, while you suggested that a promoter classification should be done if the founders are enjoying unlimited rights and with no restrictions, what is the difference between the rights and responsibilities as well as the restrictions of a promoter versus a founder?
I think it's a little bit as, as Sandeep says, that there are far many more responsibilities in a as far as the promoter is concerned. So if you're not classified as a promoter, right, there are a couple of things which happen. One is that as a founder, you get stock options which promoters don't get. The other piece is that the liabilities which typically apply to a promoter, for example, there are, if you, in case of violation of regulations, SEBI can actually freeze your assets, your disclosure requirements in terms of when you're going to trade or whether your shares are pledged or not pledged. None of these disclosure requirements really apply to you. Why you can, and for a lot of these founders that you see in new age companies, right, they've got themselves embedded into the articles of association to give themselves rights which are equivalent to that of a promoter. So they have board seats, they have committee seats, audit committee, nomination, remuneration seats, and there's a sort of retain control. So I think what happens as a function of being a founder is that you enjoy the control that a promoter does. You don't necessarily have the dominant equity that a promoter does, but you don't have the responsibilities and the liabilities which come with that particular tag. So, while Sandeep has clearly it's a point of view of saying that, why have this whole tag of being promoter and why not just look at it as control? I think the challenge, and this is essentially a broader question for the regulator also to address. But it becomes easier for looking at it control in that perspective, right? If you're looking at it in terms of promoter or not promoter, we look at the whole definition of control. It's a very wide definition, and it becomes difficult for someone who's in the executive capacity, for someone outside to say that is the control coming as a function of their shareholding, or is it coming as a function of the fact that the person is an executive chairperson or the managing director. And to be able to de-link the two and say that this is coming because because of the shareholding or because of that control becomes a bit more confusing. So I think this is a challenge. Therefore, but notwithstanding, the fact is that today the promoter tag exists.
Yes.
And when you have a bunch of companies which are now classifying, the founders as founders, which are not even KMP positions, so therefore it's not there's literally no liability attached to it from a regulatory standpoint. There is a certain unfairness in that situation.
Yes.
And that's really what we're trying to highlight.
And both Sandeep and you, Hetal, you've raised one important aspect as well, control. Now, control definition, again, perceived by the different regulators has also been different, and that also is up for a big debate. But Hetal, I want to ask you one important question on the stock options. Where does that particular big benefit which comes with the new age company founders, that lies vis-a-vis a promoter classification? Is there a financial direct gain because of not classifying as a promoter?
No, it's a significant gain. And the new age companies operate in a particular structure, right? So the regulation on stock options says that if you are a director who holds less than 10% equity, you can get stock options. But if you're a director which holds more than 10% equity, you can't. Now, the equity again is classified as direct and indirect through bodies corporate. So in certain cases, you actually have an instance where one of the founders holds almost 5% equity through a trust route, but because it's not part of the definition, it doesn't get counted as control and therefore eligible to get stock options. In the new age companies, what's happening in the stock options is that a lot of the promoters are founders, so I'll correct myself. A lot of the founders are getting extremely large quantums of stock options at a significant discount to market price. And you know that several of these companies post-IPO have actually eroded shareholder wealth, right? From the IPO price, they're currently at significantly lower levels, a lot of them. But notwithstanding, the promoters, when these stock options get exercised, will still be in the money. Vis-a-vis investors who invested at the point in time of the IPO will have lost money. And this is a significant size, right? In terms of stock options, for example, in terms of fair value of stock options at the time of the grant, if you just look at the IPO price, that could have been anywhere close to 4,000 crores almost for Vijay Shekhar Sharma, 1,500 crores around for Deepinder Goyal. So these numbers are extremely high. Of course, the numbers have come down given that the stock price is also eroded over a period of time, but notwithstanding, if they exercise their stock options now,
right.
And this is a more broader conversation, not sort of specific to individuals, but if they exercise their stock options now, they will continue to be in the money, but that's not something that investors will have.
So, Hetal, in the interest of minority shareholders, since a lot of new age companies have made it to the public market, I want to understand, are the disclosure standards by a founder and founder-company relationship, are they well defined, and have they been disclosing enough? Case in point, vesting conditions for stock options?
No, actually, the fact that the founder itself is not defined in regulations makes it very difficult to really, therefore, tag any of the disclosure requirements per se, right? I think some of these stock options have been given prior to, just prior to IPO,
Right.
just prior to IPO. And therefore, there is lack of clarity in several instances in terms of vesting conditions, vesting durations, and in some cases, the vesting conditions have come out in a piecemeal manner.
All right. So, Hetal, you made your point, and very important points are made there. But Sandeep, final word to you. Of course, I want to just put that across that a lot of accountability is also attached with the promoter classification. And we've seen that in the whole IBC cases where the personal guarantees actually took the promoters to court. And to willful defaulter tags and many restrictions. But final question to you, Sandeep, and a quick answer to that. Now, there are several categories. There are professionally managed companies, erstwhile, which were started by founders. Now the institution has become bigger than the founder, and they are well-run corporate institutions. And there are these new age PMCs and the other set of business, family-run businesses. How do you differentiate the three?
Really, my answer really would be, don't go by labels, and that's what we've been doing till now. And I think Hetal mentioned that it's easier, but I think I can think of an analogy of bureaucrats. When there's time to appoint a finance secretary, if everybody is from the same batch really, so therefore the same rank, they look at the rank you got 25 years back when you sat for the UPSC exams, right? So nothing else matters. Your rank 25 years back in that written exam you took is going to determine whether you're going to be finance secretary or not.
All right.
So it's very easy, but it's wrong, right? So,
yes.
So I think putting a label and then kind of completely rely on that is, I think, incorrect. I think we should look at facts, and that only happens when you take control.
So actually, it could be individual cases that can be looked upon by the regulator. But one point came out very clearly that there is arbitrage in regulation that could be really playing out and could be addressed by the regulators. Thank you so much, Hetal Dalal as well as Sandeep Parekh, for joining us on this interesting conversation. With that, we'll slip into a short breather on Big Deal. Don't go